Bloomberg Audio Studios.
Podcasts, radio, news.
We're going to move to discuss the state of the credit and loan markets with the perfect person here. Lending Club CEO Scott Sanborn, really moving here from the commercial real estate markets to the consumer market. Great day to talk about the consumer with you, Scott. Thank you for joining us. You've seen consumer credit here just soar past $1 trillion in the United States alone. From where you sit, is that kind of growth in credit sustainable?
Well, it's certainly sending a message about the state of the consumer who's had to deal with, the worst inflation we've seen since the 80s. And part of the way they've dealt with that is by increasing the amount of debt, specifically on credit cards. The problem with it is that we're now at a place where nearly half of all Americans are carrying credit card debt. The balances have grown just in the last couple of years, 10%. And the rates they're paying are the highest they've ever been since the Federal Reserve started measuring this back in 1994. The average rate paid on cards is now over 22%. So just to have the same balance they had a few years ago, consumers, their minimum payments are going way up.
Well, it's incredible, too. The notes that you've given me is that APR margins hit a record 14.3% in 2023. APRs on credit cards nearly doubling to 22.8% from 12.9% in 2013. Do Americans largely know the math here behind the higher interest rates and how much that could burn into their pocket at the end of the day? I'm wondering at what point there's a wake-up call.
Yeah, it's a great question. And the answer is, unfortunately, no, they don't. Half of all Americans do not know the APRs on their cards. That's not how they shop, right? They shop for the rewards and the affinity programs. And credit cards are a very convenient way to pay. The problem is if you don't pay it off, which, as I mentioned, half of all Americans aren't, you have a loan, and it's a really, really lousy loan.
Do you really think that Americans are working up to shore up their credit situation right now? I mean, do you see people really paying down debt to the point that they can get out of what often becomes a vicious cycle of interest payments?
Yeah, we are seeing a change in consumer behavior. I would say when inflation first hit, consumers were caught off guard. We saw that in our behavior, right? They literally were living the same life they had been living, but all of a sudden everything cost more, right? They're paying more for groceries than they've paid in, 30 years. Their rents are going up. And so it would be the same routine of shopping at the same store and eating out at the same restaurant. And all of a sudden they were realizing they didn't have any money in their account. So we have seen people adjust their behavior. About 70% of Americans are reporting that they are cutting back on their spending. And what we're trying to get out there is, you can cut back on your spending, but if you have a credit card balance that you are maintaining, there is a way to pay that off by taking out a personal loan from Lending Club. The rates that we're offering consumers are more like 14% versus 23% for cards. So we're doing our part to get the message out there, let people put it all into one simple monthly bill, because most Americans have 4 or more credit cards that they're managing.
There's a lot of Fed data showing delinquencies rising to pre-COVID levels once again. What does the picture look like moving forward, Scott?
Yeah, that's true. We saw a really benign period post-pandemic where a lot of spending categories went away, right? People weren't eating out, they weren't traveling. There was government stimulus that put more money in people's accounts, and they actually did the right thing. They de-levered. They paid off a lot of that debt. But when the economy opened up and people started spending again, and some would say revenge spending, and inflation kicked in, things went the other way. And there was a real high rate of change in the consumer in 21 and 22, where what you really saw was, as I mentioned, people getting caught off guard. And, inflation affects everybody. Unemployment, which is usually a driver of credit card delinquencies, that affects 1 or 2% of the population. Inflation affects everybody. So what we've seen is a real rate of change through 22, but things are stabilizing now and they are normalizing. I wouldn't call credit performance, while delinquencies are up, across all categories of credit, they're not up to alarming levels, right? Things have stabilized at a higher level than they were kind of coming out of COVID, but things appear to be normalizing now.
How do you think about your own credit quality here? You know, when people were worried about the state of consumer into a potential recession last year, you did see your stock at Lending Club take a hit. When do you think investors will start to get more excited about the state of the consumer and kind of start to shake off those risks tied to a potential recession and what that could mean for a consumer?
Yeah, you're right. There's been a lot of concern, and I think understandably, about the outlook for the consumer, right? We've been talking about this has been the most forecast recession that hasn't hit, and that's impacted, a lot of, especially consumer finance companies. What we just put out in our last earnings call was we shared our credit data going out over the last 12 quarters. So looked back over the past 3 years, showing our delinquency performance. And what you can see is, one, it's stabilized in line with what I just said. And two, our delinquencies are on average about 40% below the competitive set. So we feel really good about the quality of the credit that we're booking. We feel really good about the opportunity in front of us. The fact that there's $1.3 trillion in credit card debt, that is our core market. It's the largest it's ever been. And the spread between the rates that the cards are charging and what we offer has never been larger. So I think, at this point, as the consensus for a soft landing becomes a little higher and, the state of the consumer becomes more clear, we're excited to go after that.
Lending Club CEO Scott Sanborn, we thank you so much for joining us.